Good morning, everyone. It's November 6th. It's a Wednesday. And again, where is this year going? My wife is talking about making plans for New Year's Eve, and I'm still thinking that we're going to be going out on summer vacations somewhere. I am so behind. I mean, time just literally goes by like a week at a time. Instead of a day at a time, it's going by like a week at a time. All right, let's talk about fundamentals. As you guys know, the market has been steadily going higher because there is expectation or speculation that China and U.S. are going to begin resolving their trade war. To see whether Trump is acting in good faith, Beijing asked Donald Trump to remove a 15% penalty on $125 billion worth of goods coming from Beijing. And we haven't seen a response yet from Trump. But if Trump doesn't respond and if Trump doesn't bend just a little bit, we're going to go back to square one. Not good. So keep your eye on that. That's the latest in terms of China. Again, I don't believe anything's going to be worked out. I don't think Trump is flexible at this time yet. I don't think the issue is ripe just yet. So I don't think we're going to negotiate. And that's a problem. Why? As I've said it 100 times, literally 100 times, and I'll say it again, the closer we get to elections, and we're only a year away, the more China is going to go from being passive-aggressive to aggressive. Why? Because the more aggressive they become, the more it'll impact the stock market. And the more it'll impact the U.S. stock market, the worse it'll be for Trump in terms of his prognosis for getting reelection. Because Trump wants to say, hey, I want to get reelected, stock market's really strong, we're at new highs, which makes sense. And if we're not seeing that, it's going to be hard for him to pull that card out of where. So again, it's really important to resolve this trade war between China and U.S. as early as possible in order to give Trump the best negotiation for winning the re-election. I'm thinking ahead, and I could assure you, China and Trump are both thinking the same thing. It's just a matter of who blinks first, and it's going to be very interesting to see how U.S. responds to this request from Beijing to remove this penalty of 15% from $125 billion worth of goods. I can't wait to see how it resolves. Now, let's move on to the topic. Earnings. We've had earnings come out for about 70% of the S&P 500. So far, 74% of the stocks out of the 70, so about 250 stocks, give or take, are beating the earnings per share estimates by 74%, and the number's higher, the revenue's higher by 59%. That's very positive. That's better than expected, even though these numbers, the 74% and 59%, have been beaten down by analysts and revised lower and lower and lower. So while the numbers look a lot better, they're actually just a little bit better than expected. But nonetheless, I'm very impressed at the fact that the U.S. economy is still really stable and the numbers are this positive. And this is now showing us a trend because 70%, that's 70%, only 30 left, and things are looking better. So far, the numbers are better, which is keeping the market higher, and also the economic data is better than expected. In light of that, Fed keeps pushing interest rates lower. It would be best if they waited till the market was at, hey, if the Fed is listening to this, guys, wait till the stock market is at the 200-day moving average before you lower rates. That's usually how it's done. But again, I don't want to tell you how to run your business. Let's talk about earnings. We've got three big stocks coming out with earnings, and some of these stocks, especially BIDU, which I'm about to talk about, and QCOM, is going to have a major impact from China. So it's going to be very interesting to see what they report, and more importantly, what their future statement says. So BIDU, let's take a look at the chart. Let's see what we should expect. Below the 200-day moving average, above the 50-day moving average, twilight zone. If I would guess, I would say we're going to maybe rally to the 200-day line and then back away again. Not seeing anything that great. Look at this downtrend. BIDU's really taking it under the chin due to the trade war we're seeing. It's right at the crosshairs. I mean, it's directly in the crosshairs of this trade war. So I would wait for this stock to rally, maybe hit the 200-day moving average, and then think about buying puts or selling it. Again, I'm not giving you a recommendation. This is just ideas, thoughts, my opinions. These are just things that are coming out of my head. But again, these are not recommendations or alerts or anything like that. These are just my thoughts based on the trading action. So BIDU, I would wait for it to hit the 200-day moving average or go a little bit above or below. Wait till this RSI is right at the overbought level and then sell this thing or buy puts. The next one is QCOM, one of my favorite stocks, and stock that has a lot to do with the 5G networks that are coming out. This stock has the infrastructure of the 5G networks. As you can see here, it's near all-time highs. It's looking really good, and it's overbought, but it has been congesting. So in this case, I wouldn't do anything right now. I would wait for earnings to come out, and I would wait for the stock to hit the 50-day line or possibly go below the 50-day line. And then when it comes back up, I would be looking to buy it. And lastly, ROKU, one of my favorite stocks. I think the stock is going to do really well because of all the contracts that this stock has with all the TV manufacturers. Like literally every TV has a Roku box built in. So I think it's going to, and it doesn't have a lot of competition. So I use Roku. I just bought a Roku TV last week actually for my patio, for my sunroom. So again, stock is near all-time highs, heading a little lower. Wouldn't be buying it right now. Don't be in a rush to buy anything right now, and I'll tell you why. We're going to get to the S&P in a minute. But wait for this to hit the 50-day line or the 200-day and then back up higher. Not a good time to buy Roku. Now, let's talk about futures. Let's talk about the broad market. The broad market is barely higher, literally hanging on by a thread here. Let's look at the 6 months. This is the S&P 500. Looks like we peaked out last few days. We're grossly overbought. Last time we were oversold. As you could see here, look at what happened. We rallied from 2805 to 3075 or 3085, so to speak, give or take. Again, you don't want to buy when we're overbought at these levels right here. You don't want to be a buyer. You want to buy when we're oversold or near oversold level, which is why for all of you guys, in some of our programs, we're holding the long bond. The reason we're holding the long bond is because we're expecting the stock market to cool off a little bit. I'm not expecting a major downside, but I'm expecting this trading range to come to the 50-day line, possibly a little lower, like right here, and then come back up again. So I believe there will be a better time to buy stocks than right now. And if you're looking at large caps, remember, large cap stocks have a correlation to this index by about 70%. So be careful out there. Wait for this to cool off. And if you look at the small caps, let's see if we can get some confirmation. They haven't even made all-time highs. They've been just moving sideways. Notice they went higher and closed down yesterday. That's a tail gap reversal. And that gap we're seeing here and this RSI times 2, sell, 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 sell. I never said anything. I think we're going to fill this gap and we're going to come lower. We're going to move at least to the 200-day line and maybe come down. And keep in mind, one of the reasons why the S&P 500 is near all-time highs is because the small caps were giving it support on the way up. They're not moving in the direction anymore. They've peaked out. There's really no reason for the small caps to go higher right now at all. Not till the trade war sees a substantial resolution. And we're overbought. Expect the stock market to soften up. Not really decline. No major downside. Volatility's low. Markets are really complacent right now. Just a pullback to the 50-day or the 200-day line so we can begin accumulating and buying again. Sorry for going so long today, but I wanted to give you a good, clear picture of what we're seeing right now. Remember, tomorrow we have jobless claims. The number's expected to be 210, 205, 220,000. Don't expect anything out of range and expect to see bonds rally maybe as early as the end of this week. I think markets are going to cool off next few days, especially in light of this little wrinkle we're having with $125 billion worth of goods and this 15% tariff that USA wants to impose on Beijing. You guys have a great day. Look, I need you guys to give me feedback. Why? Not to help me analyze the market, so I know what you guys want me to cover. Leave me some feedback on the posts here, like this channel, and send me an email, roger@wealthpress.com, and I'll respond to you. And if you have a request, feedback, any comments, I want to hear them. I want to do a good job for you guys. I need feedback. Let me know. Talk soon. Take care and have a great week.